Pablo, do you think for investing in foreclosures is consistent, passive, easy, or reliable?
I mean, I don't know about most of those, but I definitely know it's not easy or
Yeah,
passive.
it's not. It's
Yeah.
not. It's, you're taking on a lot of risk in a lot of different forms. That's just not who we are. We are not that source of discounted real estate. We're not built for the active investor. This would not be in anticipation, even if the number of foreclosed properties did go up in Jacksonville. You shouldn't look to JWB as being a source or a solution for you, just because that's not who we are. We are easy. We're making this asset class accessible to everyday investors, and largely people are pulling their money out of the stock market and reallocating it into their JWB portfolio. And they want that same type of experience of investing in the stock market as you get with investing in rental properties with JWB. And so they wouldn't be interested in taking on the additional risk or the headache of investing in foreclosures.
Yeah, that's where my head went, man. My head went, man, if I was somebody that wasn't working 100 hours a week on my own business or my career or doing all the things that I want to do and wasn't thinking of real estate as a passive investment, then I'd be thinking, hey, maybe right now, if I want to be an active investor, I go pound the pavement and go pick up those extra foreclosure deals and maybe, and then go find a contractor and fix it up and then go find a tenant and put him in and then maybe flip that house or whatever I'm going to do. But from my perspective, that is not at all the relationship I want with my real estate portfolio. I want a relationship with my real estate portfolio similar to the way that I have purchased investments in the past, right? Like I just want to know what my return is. I want to know where my money is going. I want to know how much I got to get in to get out, and then have an expert on the other side of the line that checks in with me that I have access to. So this idea of investing in a foreclosure for me is very, very not for me, right?
Yeah. Even if you could,
yeah.
if you could increase your return on investment by 5% or 10%, you're like, nah, it's not even in the equation. It's just
correct.
Yeah.
Like to me, the next 6 months to a year of my life that it would take to be able to capitalize on a foreclosure, my efforts are better put in growing my business as opposed to like go and finding that 5% thing, right?
Exactly. And it may not even be 5%. And the other thing too is if you're following the data that we shared today, that would lead to the conclusion that we do not see a spike in the number of foreclosed properties hitting the market.
True.
Because we see an increase in the number of foreclosure starts happening, but we don't see a sizable increase in the number of foreclosure finishes happening as well. So while I'm sure there's some opportunity, some of the starts are going to go into finishes. I wouldn't look at that as, if I was a real estate professional and trying to target, where I'm going to see my biggest gains coming up in the next year, I wouldn't look at REOs as being that big opportunity. It's next to nothing right now. It will go up, but it's still not going to be substantial.
That makes a lot of sense, man.